what I think is interesting, a brief history of money. So gold, Andy's going to make the case to you that gold and silver are wealth. They're not investments, they're wealth. So going back to pharaohs and kings and queens, they held it in gold and silver, right? So it's wealth. So for example, 100 years ago, 1 ounce of gold was a $20 gold piece. And that bought a man a good suit of clothes and tie and shirt and shoes. Today, at 3,700 bucks, it's a good suit, tie, and shirt and shoes, right? 50 years ago, 1 ounce of silver got you 10 or 12 gallons of gas, 45 bucks, 10 or 12 gallons of gas. So you see the point, it takes a lot more of the paper, right? 45 pieces of paper, same 1 ounce of silver. So it holds its value over time. So it may look like silver and gold is going up, but really it's the paper going down, but that's a little abstruse. Another interesting thing, even today, in many countries and languages, the word for money and silver is the same. In all of these countries and cultures, the word for money and silver is the same even today. That's telling. In Hebrew, silver, kesef. So one of the things we need to look at, particularly with the markets in real estate and stocks at all-time highs, let's look at other assets. So do we think, from today's levels, do we think that art and antiques will double or triple in the next 3 to 5 years? I don't think so. If you think about your house, houses on both coasts, are they going to double and triple again anytime soon? Not too likely. Maybe the other way. Office buildings, hotels, resorts, malls, retail. So the commercial real estate situation is dreadful. We don't have time to go into it tonight, but we have a slow and steady bank crisis brewing. You know, if we default on a mortgage, it's 300 grand, it's 800 grand. But when you lose an office tower or a mall or something, it's hundreds of millions. The banks cannot sustain that. And so certainly commercial real estate does not look too good at this juncture. Do we think stocks will double or triple again in value next 3 to 5 years? I don't think so. I hope so. Bonds, interest rates are heading back down. So unless they go negative, we have very limited upside in bonds. And it might surprise you to learn that silver and gold have actually outperformed the stock market for the last 20 or 25 years. Everybody thinks, you know, stocks, because it has been, you know, really good 10 or 15 years. So this is called the Case-Shiller Home Price Index. And I circled, you probably can't see it in purple. The last 10 years, this is across the country, the price of houses has doubled. Now, obviously on the East Coast and West Coast, it's done more than that. But housing is at all-time highs. This is the 10-year on the S&P 500. Bottom left, 10 years ago, exactly 10 years ago, we were a little under 2,000. We're over 6,000, so that's a triple, big move. But when we look at, maybe hard to see, the green line at the bottom, this is gold, stocks, bonds, and the US dollar. Doesn't look like it because it's been so gradual and incremental, but the green, the dollar has lost 75% of its buying power over 25 years. Again, it doesn't seem, we haven't experienced really brutal inflation. It's been slow and steady, but it's important. All you have to do is go out to dinner to know that, right? Or go to a concert or a football game. Bonds, about 4%. You may remember, why is that so low for 20 years? Because there was a period where bonds were 1% for 12 years, right? Stocks almost 8. So wait a minute, stocks have been better than 8. Well, not the first 12 years. We'll look at that in a minute. And gold, believe it or not, over 9% compounded for 25 years. So a lot of people are not aware of that. So for example, at the beginning of the turn of the century, the S&P index was 1425. 10 years later, it was 1123, down 21%. 10 years. In fact, on 12/31/11, after 12 years, it was still down about 9%, 13%. So people, you know, the first 12 years of this century, stocks were negative. That's a long time. People forget that because it's been so great after that. So then after being negative for 12 years, we've had an incredible 16.5-year run. So if you look at those two, you see the blue peaks and the valleys over time. Both of those declines, that's the 01-02 crash, the tech crash, and then the 08-09 housing and bank crisis. Both times, the S&P fell about 50%. Keep that in mind. The markets can fall 50% And so after this incredible 16.5-year run, which is not normal either, by the way, could we see 5 or 10 years of subpar returns? Could the market disappoint us for 10 or 12 years again? It's possible, right? So keep in mind, this is a little tongue-in-cheek here, but it's important. Keep this in mind if you're in the stock market. If you have $1 million, and it goes up 50%, and then it goes down 50%, you're even, right? Up 50, down 50, no, you're not even. It's not the way the math works. Right? So we go to $1.5 million, and then we lose. Last 2 bear markets were 50. The average is 40. So keep that in mind. This is important. Left-hand column here, blue box on the left-hand side. Spring of '96, the tech boom, the internet, the dot-com thing gets rolling, and it's massive. And then it crashes in 01 and 02, okay? And then the next crash, you see the middle of the screen, another peak by 07, we're back at highs. And then we have the housing and the banking crisis. And the red box in the middle, at the low in the spring of '09, believe it or not, the market is exactly where it was 13 years earlier, 13 years of zero. So that's rare, but that happens too. Just be aware, you don't want to hit and I'm not sitting here projecting a 13-year zero situation, but 5 and 8, 12 years just happen in gold, it can happen in real estate. Just be aware that all assets have a cycle. Trees do not grow to the sky.